Yo, in this video, I want to talk about how to take small, acceptable losses, how we need to lose in order to win, and how to stop blowing up accounts, which I'm sure majority of traders, including myself, have done at some point in their career. So this video is going to be on stop losses, how and where to implement them. I'm going to go over a few past trades that I've taken, walk through the charts with some psychology lessons, where and why I manage my risk, along with my reasoning for taking the trade. So it's going to be a very good video. I recommend it if you need to control your losses and you're sick of taking losing trades that go out of your control. It's going to go into extreme detail about that. Before we do begin, if you want a very good trading resource, I'm going to link my Instagram at InvestToTrade in the description below. I definitely recommend you to follow it. I post daily trading recaps on here, along with very good trading tips and tricks that you're pretty much not going to find anywhere else. It's a good resource. You're definitely missing out if you aren't following it. Link is in the description below. But now let's get right into the video. Before we get into trade examples, let's go over these key points. This is going to serve as the backbone to this video. So before you buy or sell, you must make sure you're doing so when your edge is present. You have to do so when the market's giving you a good enough reason to enter or to pay attention to a stock. I see so many people buying something when it's coming up, selling something when it's coming down, and that's their only reason. You have to only take trades that fit your criteria. If you take trades that don't fit your criteria or your edge or your style, that's when you're going to blow up your account, and that's when you're going to take big losses. So we have to trade only when our setups trigger. And the second component is our confirmation signal. Now, I have plenty of confirmation signals that I look for. Essentially, they all have to do with entering when buyers or sellers are present, and I only use price and volume. Confirmation is the second component because without confirmation, we can't put the trade on. And if we do put the trade on without confirmation, we really shouldn't be entering where we're entering because most likely we're doing it off of our emotions. So now before we actually click the buy or sell button on the keyboard, we have to have a clear exit plan in place in case my analysis is not correct. If I do not have an exit plan or a stop loss in place, then I do not have a valid plan. There are many times in the Discord when people ask me, do you think that this is a good point to enter at? And I always tell them, where is your confirmation signal? And where, if you enter right now at this given moment, where are you going to stop out if you are wrong? If you can't answer those two questions, then it's best for you to sit on your hands and not take the trade because more than likely you are going to force something. For example, let's hypothetically speak here. Let's just say we enter Amazon at this area right here after it moved up about 650 or so points from the open. If we're getting long up here, you have to first ask yourself, what am I entering? What's the reason? What's my confirmation signal? For me on this chart, obviously knowing what happened later in the day, I can't answer that question. And I also can't answer where my stop loss is going to be because all the way up here, I don't know where I'm going to be proven wrong on the chart and where my analysis is going to be incorrect. So when you do enter, you have to decide on the potential reward of the trade versus how much you could potentially lose if you are wrong. Risk to reward is extremely important. It's much more important than win rates. And you have to focus on at least 2-to-1. 3-to-1's better. Obviously 4-to-1's better. The higher your risk to reward, the less amount of times you have to be right. And that's where your ego comes into play. A lot of people think they have to be right 100% of the time. I'm cool with being wrong. I'm cool with being right 50 or 60% of the time as long as my risk to reward is 3-to-1, let's just say. So you have to know and you have to make sure your reward is much higher than your loss if you are wrong. Now we have to add all of these things together. We have to use our edge, where we entered, and our confirmation signal to pinpoint an area on the chart where we are going to be proven wrong. We have to mark it, honor it, and have to cut it if we are wrong. It has to be based off the chart, and you have to be disciplined enough to honor it if you are wrong. If your ego does the talking and you can't accept being wrong, trading will never work out for you. And 99% of big losses in trading are because traders do not implement a stop loss or they implement it at the wrong area on the chart or they are not disciplined enough to cut themselves off if they are wrong and actually be disciplined enough to follow it. I always tell everybody you can always re-enter if it stops you out and it moves right back how you wanted it to. It's much easier to get out for a $100 loss than it is a $500 loss. Now we have a $100 loss on our belt. We re-enter and we make $1,000 on the next trade, and now we're up net profit $900 on the day. So let's look at this Amazon example. This was actually a trade that I took today from the pre-market plan. So Amazon above the 3354 resistance, I want it to act as support. Keep in mind I post these plans every single day in the Discord of the setups I'm watching, the levels I'm looking out for, and potentially the areas that I'm looking to play calls or puts. We wanted this to break out to the upside. I'll be looking to play calls as this may want to target that 3388.88 gap fill. It's a level that everybody was watching. I'm not a fan of levels that everybody watches, but because of the strength of the market today, this was a quality setup. What I liked about Amazon is it's creating so many demand zones lower, so we do have buyers factored in. We also opened up very strong, and if we were to look at, let me pull up the NQ chart here, pull this up over here. NQ and the S&P 500 were extremely strong today, so it supported this analysis. Extremely strong rally, nice gap up overnight, nice move up, some very heavy volume coming into the market, and some strong buyers factored into the market at all-time highs to start the week on Monday. Now, this is also where, when all of the things align in your favor, you have to make sure all of the setups or factors align in your favor. Market context is a big thing. Market direction, market conditions, volume, timing, participation, volatility. These are all things you have to factor into your entry, to your edge, and to where your stop loss is going to be. I don't know where my stop loss is going to be for the next trade I'm going to take because I have no clue what the next trade I'm going to take is. It's all done on the spot, being reactive and being fast enough. So going to this Amazon setup, this resistance did act as support. It happened in the first minute. There wasn't enough information for me to take a valid trade off of this, so I didn't catch this. It would have been a beautiful, beautiful entry. We moved up. Keep in mind the market's very strong. We were flagging above VWAP. Another acceptable entry could have been once we acted as support on VWAP. We flagged and we broke out. Another acceptable entry could have been once we started rallying and it looked like this, above 3385, 3 points away from the key level at 3388. You could have got long here. Now at this point, this is the first trade I'm going to break down, and this is the reason why I did not enter the first time right here what my chart looks like. Because if I entered here, I did get my confirmation signal, but I didn't have a good area that the risk to reward made sense for me. If I got long here and I'm waiting to get for a break above the 3389, let's just call it key level, my risk is I'm going to put it below VWAP. So I'm risking about 15 or so points. If you trade options, 15 or so points on an Amazon option is going to be a lot. So the risk was kind of a lot for the potential reward. Now we always had the possibility that we can continue ripping up, especially above 3,400, which was what I was anticipating if we got above the 8-9 area. So risk to reward here did not make sense, but that could have been a valid entry if you play a little more aggressive because this thing started moving up. Now you have to imagine all of the traders who did get long up here. The market's going to pull back, crush the premiums, and stop them out. That's how liquidity works. It's how the market moves. But before we get into my entry, I want to say this one last thing. Once you align all of these factors and you do everything that I mentioned above, you must trade like a robot and follow your own rules. The results are out of your control at this point. Once I have my stop loss in play, the results, win or loss, are completely out of my control. If I try to force something and do something against or out of my control based off of my emotions, I'm essentially delaying the process, and I'm going to do something out of my control that's going to affect me and my decision making, and it's going to make me deviate away from what the market's telling me. So you have to understand the worst is going to happen. It's planned out. The best can happen, and potentially more if we ride the trend and we let our small profits turn into large profits. If you let your emotions get involved, you are screwed. Believe me. And then never, ever put your stop loss based on a dollar amount or a percent amount. I'm going to show you why with this next Netflix trade. But never, ever on a dollar or a percent amount. That is the recipe for stopping out when your analysis is correct. So we moved up, we broke out, we pulled back here, and what I liked was this previous high acted as support. I'm going to draw a line here. This previous high right here acted as support. We pulled back into it. We were also consolidating near the high, very bullish sign. And then the next candle was a nice thicker candle to the upside. And I got long at 10:02 once it assaulted this high a little prior to the breakout. Hindsight, I should have entered at the 10:01 candle when it moved up over here. But I got long at 10:02. And when I got my confirmation signal, immediately I'm thinking, where am I going to stop if I'm wrong? And my stop was right below this 3380 low with the previous high. If it got below it, my analysis most likely would have been incorrect and I would have mistimed the market, would have stopped out for a smaller loss, and would have looked to re-enter if the market did continue with my analysis. And then boom, we got a crazy rally to the upside. Amazon absolutely ripped. And if you are in this trade with an entry where I got long, any pullback you have, as long as we are maintaining higher highs and higher lows, should not freak you out as long as you're not looking at your profit and loss. And at this point, you have a risk-free trade, and this thing rallied about 60 or so points. Now, given the current market conditions, you have to be a little protective and defensive with your profits. But these from entry around 22.36 went to a high around 55.50. That's a 150% return. And that happened in a matter of 30, 40, 45 minutes or so. So crazy move on Amazon. This thing moves, got my confirmation signal, got my stop loss, and I let the trade work out. I do not let my emotions get involved. The market is out of my control. As soon as I try to mess with it is the minute I'm going to get destroyed. And I follow my rules, trade like a robot. Now, the reason I never use a percent or dollar amount, especially when trading options with stop losses, is for this reason. So let's just say we got long, hypothetically speaking, at this 5.5718 demand zone on Netflix. Was in the first minute, more of a gamble at this point, and this was the low a day at this demand zone. But let's just hypothetically speak and say we got long. At this point, the option contracts had a low of, let's just call it, we got long at $5.80 or $5.90. So we're long at this area right here. This is the 560 calls on Netflix. If you trade the stock, this is a little different, but if you trade options, a dollar or percent amount is not good. At this point, we're in at 580. It rallies to about 780. So we got about $2 on the contracts. Every 10 contracts we buy, we're making $2,000 per 10 contracts, or $200 for one contract, which is a very good investment and a very good return. But then Netflix starts pulling back once we make a high below VWAP, yet we're still above this demand zone. We never break the low at this demand. And then we start moving back up and, breaking the highs into the supply zone. If we were to look at the option chart, I'm going to link the crosshairs. The option chart actually broke below the low and broke way below our entry that we got long at demand, although the stock never went below that low at demand. So if we had a stop loss based on a dollar or a percent amount, let's just say we were risking, $500, not off the chart, but based off of our entry, we would have got stopped out, although the stock never really eliminated our analysis, or it really didn't prove us wrong. It was just pulling back. We still never broke below the low. We still never tested demand. But if we had our stop in place on the option from a percent amount, 10% of our investment or something like that, we would have got stopped out at, let's just say, the low at 480, lost a dollar on the contracts, and these absolutely ripped, 100%. I think it was like 119%. So it keeps you in trades if you make your analysis off of the chart, not a dollar or percent amount, and you focus on the chart, not your profit and loss, not what the options are doing. Just trade and look at what the market's telling you. That's it. Now, a couple tips I want to leave you all with. is always remember that your decisions are never going to be perfect or flawless. You'll never buy at the bottom. You'll never sell at the top. Um, it's just how the market works. If you are greedy, oh, I could have made $500, but I only made $100. It's the wrong thinking. Change the way you think, or else you're just going to be in your brain too much, and you're going to be your greatest enemy. You're never always going to be correct either. We all make mistakes. I take tons of losing trades. We're not perfect. You just have to manage your risk properly, and we need to continue to learn from those mistakes in order to grow and get better. I would be the richest trader, the richest person in the world if I didn't make any mistakes. It's just how the market works. You learn from your mistakes and you make them as controllable as possible and as little as possible. And I also contribute a large portion of my success to my losses in trading when I first started. I'm lucky enough that I implemented risk management and my losses were minuscule compared to the nightmare stories that I hear about blowing up accounts. I did blow up accounts as well, but my losses were very minuscule according to my account. And I contribute those losses and those failures to the success that I have today. Cut those losses quickly. And I also recommend trading with the same size dollar amount per trade so your risk will always be the same. A lot of people go in with 10 contracts per trade and the amount or the initial investment varies. I recommend, if you want to trade with $5,000, $10,000, make it the same amount dollar-wise per trade so your risk is always going to be the same. You don't want to risk 3-to-1 on a $5,000 investment and then go risk 2-to-1 on a $20,000 investment. It just doesn't make sense. So try trading with the same size per trade so your risk is always going to be the same. But I think that's it. I think I'm going to end you all off on that. If you enjoyed it, hit the thumbs up button, subscribe to the channel. If you truly want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. But besides that, I'm going to end it. Peace out.